what's happening with it, because it's a bit all over the shop for oil, and we all know that oil is very fundamentally sensitive. So somebody says the wrong thing or implies something or whatever, and then you'll see oil fly in one direction or the other. At the moment on my chart, and charts will change and alter just a little bit depending on the broker and the source of the liquidity of that commodity. So mine closed at 87.06 and it's continuing to trade within a range again. I will show you that on another setup. We do have a ring tie setup on the 4-hourly chart that started the week, but what has happened is the continued news that China's COVID lockdowns, particularly in those high manufacturing, multi-million-dollar regions such as Shenzhen and Chengdu, it became the narrative this week. It was all about what was happening as far as the lack of the China recovery story. So that really had an impact on the chart. So as you can see here, there's the ring tie on the 4-hourly chart, and down she came, all the way down to yet another level on the lower end of the range. Again, there was a bit of action around non-farm payrolls, but that sent it up and brought it back down again, and it closed just above that level of support. So other than that, it was just down she went for the count. But when you look at, as I said, if you're trading down on those smaller charts, take a step out, and I please encourage you to all to have a look at a daily chart at least before you hit a trade, because you can see here quite clearly, it's used the 50 EMA as resistance, and it's just come back down again, and we're just sitting in this trading range. Will it flick down to the lower side? A lot of the just listening to a lot of the big banks and their analytical team are not saying that, it's not going to go any further, that it should be turning around, and we should be looking at around oil, particularly coming into the northern hemisphere winter. We should be looking at oil getting back up over $100 again. So it's not next week, don't know, but for the short, and I'll call it short term, because scarily enough, when we flipped over the chart to September last week, we've only got 4 months of this year left, which in itself is just frightening. But we can see that we are trading in a range. We are not advancing like we had been previously, or in a chronic downturn. But we've had 3 days of a downturn. It doesn't make a downtrend. We are still within a range here, and have a look at that range on the weekly. Yes, I know we had we closed down low, but all we did was close on the low of that range. And if you flick up onto the monthly, again, we've got higher highs, higher lows, higher highs, higher lows, higher high. Yeah, we are starting to go back, but this is a retracement in an uptrend. If somebody would like to argue with me on that one, go right ahead. Not going to get far, but that is definitely a retracement in an uptrend on a monthly chart. That's what we've got. So moving ahead, the fundamentals. It was all about the Chinese weakness and the fact that they are putting other, the PMI index, which was really, really important, which was indicating that not much has happened. They were all waiting on the China recovery story, and it hasn't happened. The PMI index was the critical indicator for us to see if there was any movement at the station. There was none. The return of lockdowns. So Jeff, you were referring earlier in your opening review that it almost seems like what COVID, but look at this. China's putting big multi-million-dollar regions back into manufacturing regions, by the way, back into lockdown. So that's not a good thing for the recovery story at all. They are still running with that whole zero COVID hope. Let's call it hope, because it's just hard. Also, you've got a bit of political instability in Iraq as well. It wasn't a big move when that news was announced, but it's just failed to bring any bullish trend coming through at all. It's just there. And as I said, we've just got to keep an eye on all those very sensitive markets that have connections to oil, who are major players in that oil spectrum, not just Russia, not just China, not just what's being released by, the special reserves or anything like that. You've got to just keep an eye on all those kind of things. OPEC meets tomorrow, September 5. So do you think I'll be doing any trading tomorrow? I don't think so. I think we'll just be having a little look about what goes on and what they're going to do as far as increasing or decreasing production. I won't be surprised if they just say, let's leave production as is. That will see a bit more of a push up in price. But again, they've surprised us a couple of times in the past. So they're the fundamentals and what we need to look forward to coming up. As I said, the meeting tomorrow, take note, don't trade, wait for that information. It's very, very sensitive to OPEC at the moment. As I said, the daily chart closed with a gravestone doji, but you are talking about price action hitting the bottom end of that range. Is there a bounce? We need to just wait and see on that one. The monthly chart shows a sharp retracement from the uptrend in place. So that could have just simply be three stone crows, I think. Three black crows. The Stone Crow's pub in Crow's Nest, isn't it? I should ask you, Jeff, you would know. It's a pub, 3 stone crows. But the 3 black crows. Unfortunately, I do. That is a technical setup for just a retracement in an uptrend. So we'll see what's coming forward. But just beware of the further volatility. So that's my oil review and summary, chart analysis, and what's coming up. But the big one will be what they do tomorrow at the OPEC meeting regarding production.
Yes, and I think the big one for generally the markets globally will be the ECB press conference on Wednesday or Thursday. I think it was probably Wednesday, if my memory serves me correctly, because the dollar will react to that, and that of course will shape pretty much everything else for short term anyway, if nothing else. Do you know what, watching your analysis is fantastic. And it takes me back. It takes me back to when my trading improved, because I never used to do that. That's work, right?
Oh, that analysis thing.
Yeah, I used to turn the charts on and expect us to jump into the market and everything would be fine. But the reality is, unless you do that work, and it's best done over the weekend, of course.
Yes.
So that you've got exactly what you've got in front of you. You don't have to rely on your memory. You've actually gone through the process. You've noted it down, and you can refer back to that at any stage during the week. Think, what was I really thinking at the beginning? Oh, that's right. That happened. Here's why I have this opinion. Here's why I'm biased in that direction. So if anybody here is watching that doesn't do at least, and I'm not suggesting you go into the depth that Ainslie does, but when I started doing, well, go on then. Go to that link. But when I started doing that, and I did it every day, not just at the week, I did it, updated it every day, and I'd produce a chart of euro dollar and give my opinion and all the rest of it. And I didn't have to worry. I didn't have to think too much when the market was in action.
Well, there's a reason I know that 1680 is a really key level on gold.
There you go.
And I also know that I've got to listen for OPEC meetings for oil. And if you are going to trade commodities, everything's tradable. It's just that you shouldn't. With some of these commodities, just learn what makes it move. The interesting thing with the euro hitting parity over the last couple of weeks is, I remember going back about maybe 10 years ago when the euro, everybody thought it was going to crash and burn and disappear when it went to $1.30. And that was, you could see it come down to 1.3 and it would bounce back off this level. And it was driving me crazy because I was just waiting for this to go. And then I found out when it got to 130, there was a lot of Russian money propping up the euro because they had a vested interest. What isn't around as much at the moment?
Mm-hmm. Interesting.
And we've seen it just go down, 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 down. So that influence, and people say, oh, nobody can corner the market. It was just like, there's a lot of Russian money actually on the euro back then, but it's not around as much anymore. So it's interesting that you have new players in that whole scenario, that whole scene now. But yeah, ECB coming up this week, and how that's going to impact with the US dollar, and are we going to see it go down to 95 cents? It'll be very interesting with the euro this week.
It will be very interesting to see what the ECB, well, they're supposed to be going 75 basis points. I think that's what everyone's forecasting. If they miss that in either direction, I think we're going to see the market do very interesting things, at least for short term.
Yeah.
Mate, thank you so much for your input. As always, very, very interesting. And now I need to add just that little bit extra to euro dollars analysis. Look, questions. Thanks, mate. Have a great week ahead.
Have a great week. Have a great week, everyone. I hope that helped. And as I said, both of those golden oil, I have not got anything to jump in and say, hey, let's get excited. We're going to have to just wait and see and be very patient on this one.
Guys, thank you for sharing your Sunday with us, at least for that brief half hour. And we look forward to your company, as always, next Sunday, when we will do it all again with probably 3 different traders, I should imagine, as is normally the case. Sam, thank you so much for looking after us, and have a wonderful weekend, everyone. Week ahead.
Weekend's gone. Happy trading.